Hi guys, welcome to my YouTube channel. My name is Zwanndanana, and in today's video I will be reviewing my tax-free savings account on Easy Equities, and I will also be highlighting some of the top performing ETFs on my portfolio. So let's get started on this video. Okay, so firstly I just want to say that I'm very grateful about tax-free savings account. For some of you who do not know, tax-free savings account actually allows us to invest without getting taxed on our capital gains, on our dividends, as well as interest rates if you invest on a tax-free savings account with the bank. Okay, so this is good considering that SARS is always figuring out an opportunity to tax us. So this is such a lovely opportunity to be able to save without giving some of our money to SARS, right? So one of the conditions that is a requirement for the tax-free savings account is that you can only invest a maximum of 36,000 in a year and 500,000 in a lifetime. So I started challenging myself to say I want to maximize my tax-free savings account all year, every year for the next 13 years, so that I can reach that 500,000 and have it invested on tax-free savings account without getting taxed, right? So I want to see how that's gonna work. So this is 2023 and I'm actually recording in January, and there's a huge possibility that this video will be posted in Feb, but 2023 will be my third year maximizing my tax-free savings account, right? So currently I have not maximized my tax-free savings account for 2022. I think I'm left with 20,000, meaning that I've deposited 26,000 this year into the tax-free savings account. But I believe that before the end of the tax year, which is in February the 28th, I should have deposited that 10,000 and be able to maximize it. So yep, that's me and the tax-free savings account. So what do I wanna talk about? Okay, in as much as tax-free savings account can be found by unit trust companies, by banks, by bonds, on a government retail bond, I actually prefer to use the one on Easy Equities account, and this is because when you use the one on Easy Equities account, you get to invest on ETFs. So ETFs is a group of shares that follows, let's say, four types of structure. So they are grouped maybe following the company category, like financial companies, fintech companies, they can follow that. So they will group certain companies together that follows a certain index or a certain industry and create this one share which has an exposure to multiple company within it. Okay, so other things that they actually follow could be location, could be currency. I think bonds mainly focus on currency, and it can also be industries as well. They could be mining companies, etc., etc. So that's how ETFs work. So what I like about ETFs, and the reason why my tax-free savings account is mainly based on ETFs, is because they have low risks. And if you look into individual companies, to be honest guys, they fluctuate a lot. There's like a lot of ups and downs, and that can be straining, especially if you are a beginner, right? So I love it because I get low risk and I don't get to view it every day, and I'm not shocked by seeing minus 50%. Like, it doesn't happen. Oh, I hope it doesn't. But you will see it coming if an ETF is losing. So one of the biggest beauty about ETFs is the direct diversification that you get. By buying one ETF, you get an exposure to multiple. For an example, I'll be talking about the top 40. And in the top 40, you find an exposure of 40 companies, which is amazing. So by buying one ETF, you have an exposure to 40 companies, and that's really nice. So last point about my advocacy for ETFs is that it's easy to understand, right? If you are to buy an individual company or an individual share, guys, like, it's such a painful exercise. like the amount of financial statements that you have to review for you to feel confident and say this, I feel like this will work. It's a lot. It takes a lot of effort, and a lot of us do not have the knowledge, do not have the will to actually go through all these financial statements and actually read the fundamentals and understand where the company standpoint is. So ETFs you don't have to do that. They have what is called a fact sheet, which is the place where you can find all the information that is needed for an investor to understand where the ETF is and to actually make their own conclusions in terms of where the ETF could be. Okay, so I find it very easy to understand and very user friendly, because there is one place, which is the fact sheet, where you can go to if you want to understand that ETF. I'm sorry for the long intro, but let's get into these ETFs that I felt like for 2022 they saved me. They saved me in 2022. To be honest, I'd say the first 3 quarters of the year in 2022, my ETFs were not doing well. It was either minus something or plus 100 rand. So it was really not doing well. Now it's January. What date is it today? The 10th? Let me quickly check. 13th. It's January the 13th, and I'm currently sitting on 3,600 rand as a profit. So my total tax-free savings account has 67,400, and the profit currently is 5.6% on the overall account, which it's fairly good considering that at some point in 2020 I was on the minus. Right, so let's highlight the 3 ETFs which I feel like are the ones that are recovering my overall portfolio on the tax-free savings account, right? Number 3, I'm talking about 3 of them, and I will start with number 3 going to number 1, so stay tuned until the end so that you can get to understand which one is the first one. Okay, so number 3 is the Citrix DIV Plus. So when I bought this ETF, really I was very much bullish, like I was cheering for this ETF, because the thought of having an ETF that actually focuses on companies that pay dividends, for me, that was exciting. This is simply because I don't buy individual shares because they pay dividends. That's not one of the reasons why I choose the companies which I have on my ZAR account and my USD account. I don't necessarily focus on I don't necessarily focus on dividends, but if a company pays dividends, then good, right? So having an ETF that has a focus on dividends paying companies, that means that in as much as I don't go looking for companies that pay dividends on my own portfolio, individual portfolio, I can have an exposure on a lot of these companies that pays dividends through these ETF. So that was the thinking. So currently I'm sitting at plus 12.26%, right? So yep, that's huge, because that's more than what a bank can give you in a year. So I'm happy with that. And I'm sitting on the profit of 1,000 rand. I think I only have like 11,000 on this account. So the share price currently for the DV Plus Citrix ETF is sitting at 3 rand point 30. I know that the low value of a per share doesn't necessarily indicate that a share is cheap, but I feel like, you know what, you can still get a lot of shares with a 20 rand on this. So if you're looking to try just to start, you can buy 20 shares of DV Plus, and then you're good to go, and you won't even spend too much money. So throughout the year 2022, this DV Plus ETF was ranging from 2.9 to 3.2 per share, and currently is trading on 3.3, and I'm hoping that it continues to stay there. I'm not sure if it's the all-time high, but yeah, 3.3, it's a very high for 2022, right? So I'm happy with that. Just a little bit about DV Plus and the companies that it holds, just so you can know what are you exposing yourself if you buy the DV Plus the Citrix DIV plus ETF. So there's Tungela, there's Kumba, there's Exaro, there's Anglo American, there's Sibanye, there's BHP Group, there's Impala Platinum, there's Nedbank, there's Standard Bank, and then ABSA, right? And if this is like the top 10 companies that has a highest holding within the overall ETF, right? So the top 10 is mainly constituted of mining companies. This is simply because a lot of mining companies really pay dividends, and it's just mining and banks and 3 banks. So these are industries that are focusing on paying dividends. So, and yeah, that's why this ETF also paid dividends 4 times last year. So yeah, dividends ETF. Okay, so and the total expense ratio is 0.41. I think anything less than 1 is still good. Okay, so we are good to go. So that's what that's the third ETF that really saved my portfolio. So number 2 is the RESI 10, right? And you will see why. RESI 10 tracks the index, I think it's called J310. So if you want to track it or check it on the JSE, you can check the J310 index. Okay, so the RESI 10 actually tracks resource industries, and I'm not sure if it's like top 10 resource companies, right? I wanted to get an exposure to mining companies because in my ZA portfolio I only have I have a lot. I said only because I was still thinking that I have Tungela and Exaro, but I've added Sibanye and Sasol, and some of those companies are also there on this ETF. So top 10 from this ETF is Anglo American, Impala Platinum, Sasol, Goldfields, Sibanye, Anglo Ashanti, Glencore, BHP Group, and Northam. I think what I like about it is that it holds some of the companies that I wouldn't even buy in my individual shares portfolio. So I'm glad that I have it, but if you have noticed, these are mining companies, and the DV Plus index is also constituted of 7. The top 10 is constituted of 7 mining companies, meaning that I hold a lot of mining companies, which is not healthy for my overall portfolio, because if something is to happen to the mining industry, that means the DV Plus index will not do well, the RESI 10 will not do well, and guess what? Even my individual ZA portfolio will not do well because I have 4 companies that focusing on mining. Okay, so just on the performance side, because I didn't tell you the performance, I was rushing to highlight that it has a lot of mining companies. Of course, it focuses on mining companies, it would have mining companies. The performance for me for 2022 end of the year, I was sitting at 13.69. That's also good. So let's go to the number 1, and this one is very good, guys. That's a very good one. Like, I'm grateful. So it's the top 40. The top 40 is really doing well, and they are sitting on my portfolio at plus 18.6%, which is very, very good. Currently they are trading at 73 rand per share, and that's the all-time high. It is its all-time high, and I'm glad that we are reaching new heights with the top 40, because this is one of my fighters. I really love the top 40, and it's a lot more diversified than the 2 ETFs that I mentioned, because they are mainly on mining. So I love the top 40 because it has good exposure. So top 10 companies that constitute the top 40 is Richmond, it's Anglo American, another mining, it's Nespa, FirstRand, which I hold on my ZA portfolio, MTN Group, which I hold on my individual portfolio, Standard Bank, which I do not, and I would like to, because Standard Bank is doing well in terms of performance. I think this year in 2022 they closed the year at plus 14%, which is really great considering that Capitec was at minus 12, if I'm not mistaken. So they also have Process, if I'm pronouncing it correctly, British Tobacco, which is good because I have an eye on British Tobacco, and they have Impala and Capitec as well. So if there's one thing that we can conclude, is that the ETFs that I hold actually are similar to my individual companies, because really I have similar appetite. But one thing that I like about ETFs is that ETF performance is not about one individual company. It's a combination. It's a combination of these performance. What can those companies do together? And that's what I like. So the top 40 is a good indication of how JSE is doing, or the direction in which we could possibly go. So it's being recovered. It's really a good indication that the JSE could be recovering, or a lot of this big companies by market capital are recovering. So which is a good sign, and I'm hoping that this is going to continue throughout the remainder of 2023, and we are going to continuously for the rest of the year see a positive outlook. So those are the companies that I hold. Not companies, those are the ETFs that I hold. Just to recap, number 3 that is doing well is actually the DV Plus, which is sitting at 12% for me, for my portfolio. And we also have the Resi 10, which is sitting at 13.9% for my portfolio. And another one that saved me is the top 40, which is sitting at 18% for my portfolio. So those are the ETFs that I'm going for. And if you watch my video, you would know that I don't actually believe in buying new ETFs or new companies. I actually believe in adding where there's opportunity in the ones that I already hold. And there's a lot of opportunities on my ETF portfolio or tax-free savings account portfolio, because yeah, in America things are not doing well, meaning that the Nasdaq is not doing well and the S&P 500 is not doing well. So I'm hoping that in the beginning of the year, while some things are still not doing well in the US, I'm definitely going to buy more of Nasdaq and more of S&P 500. I know these rumors of recession coming and that threaten us in the stock market. A lot of people actually pull away from the market when that happens. But hey, let's see how that goes. Anyway, don't forget to like, comment, and subscribe. This is the end of the video. Cheers.